Miners starve, institutions provide extra food? Coinbase tears off the mask of no token. In August, Ethereum was called the academic master, Solana was the workaholic, a maximum of £20,000 per person? Isn't this just putting shackles on the market in disguise? Before the financing was closed, SOL was given the title of Helios. How big is the ambition?
Tuesday, September 16th, BitcoinTV English channel. Where is the coin chain? I'm Michael. First, let's take a look at the 24-hour cryptocurrency headlines. Miners' wallets have been tight lately. August hash rate surged, and the pie is being cut smaller and smaller. At 1 EH per second, they only make $55,000 a day, 5% less than in July. Bitcoin mined by US-listed mining companies has also fallen to 3,573. Mara Holdings alone has amassed 705 with 59.4 EH per second, followed closely by CleanSpark with 50 EH per second. To put it bluntly, large miners can still get extra income, while small miners are stuck with a small portion. Meanwhile, institutions are enjoying a lavish feast. The Federal Reserve will meet on September 18th, and a 25 basis point interest rate cut is almost certain, 95.9%, with a 73.8% probability of a 50 basis point increase in October. Funds can't hold back. On September 15th, the Bitcoin ETF raked in $258.92 million in a single day, while the Ethereum ETF was even more impressive, bringing in $361.05 million, a massive 5-day surge. While miners are struggling, institutions are desperately adding to the slate. If interest rates do indeed cut, this bull market hot pot is likely to be a mess. Short-term fluctuations are just the seasoning, while long-term trends are the main course. Bitcoin and the S&P 500, two old buddies, used to share both hardships and joys. However, over the past year, one has suddenly taken the lead while the other has fallen behind. During the last decoupling, Bitcoin initially plummeted to $54,000, only to quickly surge to over $100,000, a true comeback. Now it's happening again. The S&P 500 hit a record high of $6,600 in September, while Bitcoin languished below $108,000, resembling a laggard. Don't underestimate this stock. History shows that Bitcoin thrives on playing catch-up, playing dead in the front while catching up. At this rate, as long as the US stock market remains stable, Bitcoin could pull off a powerful counterattack at any moment. Bitcoin's NVT Golden Cross is essentially a valuation thermometer. It measures the relationship between market capitalization and on-chain transaction volume. Highs and lows in the value reflect shifts in market sentiment. A reading exceeding 2 indicates a feverish market. Prior to the peaks of the three bull markets in 2013, 2017, and 2021, the NVT reached 4 to 6, only to be followed by a frenzy and a collective cashing out. A drop below -1 signals a clearance sale. The NVT took off from these lows in 2011, 2015, 2019, and early 2020, providing repeated opportunities for long-term investors to get on board. The current level is approximately 0.3, neither too hot nor too cold, indicating a healthy state. In the short term, the market has not yet reached bubble territory, and prices have ample room to continue their upward trend. In the medium term, if it rises above 2, be wary of a pullback and profit-taking. In the long term, a negative reading would signal a renewed buying opportunity. Based on past trends, the current indicators are likely to be laying the foundation for Bitcoin to move towards its target range of $120,000 to $150,000. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the next 24 hours. Click the bell to join our channel and become a member, receiving your membership code Monday through Friday. Base's biggest strength is its reliance on Coinbase, After all, with 100 million users and $80 billion in assets at their fingertips, they can easily usher users into the DeFi arena. Base's TVL has already reached $1.5 billion, firmly ranking 6th on the public chain rankings, making it the new engine of the Ethereum ecosystem. Since its 2023 launch, Base has consistently claimed, "No coin issuance, we focus on development." Now, with the rumors, it seems like a real slap in the face. If they actually issue a coin, it would be a complete plot twist, claiming, "I'm a Buddhist," while secretly sharpening their knives.
Coinbase CEO Brian Armstrong recently stated that the company is exploring the possibility of launching a native token on its Ethereum Layer 2 network, Base. This move could be a major turning point for Base, ending the tokenless model it has maintained since 2023.
We know that we need to keep pushing the boundaries of what we can do with crypto. Because the only way we're going to have this positive impact on the world is if we're willing to push boundaries and be creative and figure out how these new tools can unlock new systems for all of us. And so with those as the North Stars, we're going to be exploring a network token for Base.
The introduction of tokens not only strengthens governance and incentives, but also potentially boosts community engagement and ecosystem expansion. From an industry perspective, this move echoes Arbitrum and Optimism, two major L2 platforms that have successfully established governance frameworks and funding incentives through native tokens. If Base follows suit, competition in the L2 space could intensify.
Coinbase, the big brother, isn't one to be trifled with. CEO Brian Armstrong has made it clear, issuing a token is permitted, but only within regulatory compliance. With Trump's return, US policy appears much more favorable than before, potentially opening a path for Coinbase to launch its own token. The question remains, when will the token be issued? How will it be distributed? How much will be issued? With no official confirmation, the market is left to its own devices. Rumors are swirling, but until official confirmation is given, it's all just speculation. If a token is actually issued, it would mark a turning point not only for Coinbase, but also potentially upend the entire L2 ecosystem. August's cryptocurrency market was a whirlwind of contrasts. At the high end, Ethereum became a cash-grabbing machine for institutions, with $2 billion pouring in. Bitmain was even more aggressive, acquiring 690,000 Ethereum in one fell swoop, representing nearly 1% of the global supply and effectively becoming a dominant force in the cryptocurrency world. Why are institutions so invested? Because Ethereum has become the water, electricity, and gas of the crypto world. Anyone seeking to capitalize on the market cannot avoid it. Meanwhile, Solana is demonstrating a grassroots comeback, riding high on billions of transactions and proving itself a popular platform for the masses. Would you call this a two-horse race or a dance of ice and fire?
According to Artemis data, Solana's monthly transaction volume exceeded 29 billion, with a daily average of 90 to 100 million transactions, firmly maintaining its leading position among public blockchains. Ethereum's on-chain transaction volume reached new highs for 2 consecutive months, exceeding 51.77 million in August. DEX monthly trading volume reached a record high of $140.1 billion. In contrast, Polygon experienced a net outflow of over $1 billion, while Arbitrum and Base also saw outflows of hundreds of millions of dollars.
This market trend is like a reality show voting show. Those with real talent will rise to the top, and those relying on hype will be eliminated. Ethereum is a top student player with institutional ETF allocations, developers willing to pay high gas prices for security and brand recognition, and users flocking to Layer 2 to seize DeFi. Solana takes the value for money route, with ridiculously low transaction fees and high transaction volume, earning it the second highest fee ranking. In contrast, some chains that only offer airdrops and slogans are now facing funding shortages and plummeting popularity. Simply put, the public chain competition is no longer about who has the flashiest technology, but rather who has the most stable financial situation and the most sustainable ecosystem.
Stablecoins are booming, and traditional finance is getting anxious. Bitcoin is a religion, SOL a cash cow? Has corporate coin hoarding completely shifted?
The UK has been keeping an eye on cryptocurrencies for a while, but its actions have always been slow. In April, the Financial Policy Committee expressed concern. Stablecoins are rising too rapidly, regulators are failing to keep up, and the European Central Bank's currency could even be marginalized. Before the UK could even catch its breath, European Central Bank President Christine Lagarde sounded the alarm. If regulatory loopholes are not closed, the US will seize all euro funds and data, and the dollar's position in cross-border payments will be even more precarious. The Bank of England has also begun to accelerate its pace, but another incident has caused a stir. The question is it trying to overtake others, or will it continue its habit of lagging behind?
But what we seem to have seen is that a number of activities which in the regulated financial sector would have had certain protections and regulations around them happened in an unregulated sector, and then we saw things like clients' money appears to have gone missing, conflicts of interest appear to have happened between different operations, transparency, audit and accounting.
The Bank of England plans to consult on systemic stablecoin regulation in Q4, proposing holding limits of £10,000 to £20,000 for individuals and £10 million for businesses. Regulators are concerned that this will divert deposits, tighten credit, and hinder the development of the payment system. However, this limit proposal has been strongly opposed by the crypto industry, which criticizes it as stifling innovation and vitality.
Banks are panicking, with Citigroup's Ronit Kos bluntly stating that if stablecoins can both generate profits and be convenient to use, banks' money will be siphoned off sooner or later. Bitwise's Matt Hogan quickly retorted, "Are you worried about losing customers? Then add some interest. Don't just try to strangle them." With regulators demanding strict regulations on one hand and banks fearing losing their jobs on the other, stablecoins have become a disruptor in the financial world. As for who will ultimately win, we'll have to wait and see the results of the Bank of England's fourth quarter consultation. Hoarding coins is no longer just a hobby, it's a game of turf war between companies. Strategy, as always, prioritizes Bitcoin as its core holding. DeFi Development Corp is simply pouring its funding into hoarding SOL. UPEXI is even more aggressive, directly staking SOL and creating a fund vault brand. Mercurity Fintech is also getting in on the action, aiming for a dual approach of staking and ecosystem collaboration. The most ruthless is Nasdaq-listed Helios Medical Technologies, HSDT, which has invested $500 million in the Solana fund vault. You'd say this isn't just flattering Sol, it's practically crowning it.
And so we realized that we've just built all this incredible expertise and knowledge over time, and we care so much about Solana that, wow, it really makes sense for us to just go for it and try to do something on behalf of Solana.
Helios completed an oversubscribed PIPE financing round, pricing common stock at $6.88 per share, and attaching 3-year warrants with an exercise price of $10.12. If fully exercised, the financing could reach up to $1.25 billion. Pantera Capital and Summer Capital led the investment, which will be used to build a reserve asset strategy centered around SOL, significantly increase SOL holdings over the next 12 to 24 months, and expand into staking and lending opportunities.
Helios's recent moves not only brought in a ton of capital, but also brought in a new leader. Joseph Chi, the new director and executive chairman, is a prominent figure, having previously headed Summer Capital and served as a top executive at UBS Asia Investment Bank. The question arises, why not hold Bitcoin, but instead bet on SOL? The reason is simple. Bitcoin in your wallet is like a dead salary, earning no interest. SOL, however, offers a 7% annualized return on staking, making it a workable coin. Furthermore, SOL has already appreciated 25% this year. Helios's move effectively brought a cash cow into the treasury, fueling the market.
At Trump's request, the U.S. Securities and Exchange Commission, SEC, is prioritizing the elimination of quarterly corporate financial reporting. Companies may no longer have to submit quarterly financial reports. Is Wall Street's quarterly blind box system over? Binance wallets are overflowing with stablecoins, reaching a record high of $40 billion. Even on-chain analyst Ali was stunned by the data. It's like Binance has created a super cash arsenal. A U.S. appeals court has directly told Trump, "Want to fire Federal Reserve Governor Lisa Cook? No way." This marks the first time a president has attempted to remove a Federal Reserve governor since the Fed opened in 1913, only to be blocked by the court. Yesterday, gold prices hit another record high, soaring to a new high of $3,680 per ounce. It's safe to say this wave of gold prices is truly golden. Who dares to say it's not attractive? Pump.Fun streamer Bagwork played unreleased songs by Drake and Future live. The memecoin market cap soared to $53 million, with creators receiving $83,400 in 2 days. Was this a concert or a money printing machine?
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you're welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.